What is up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And today we will have a long-awaited update on the technical analysis of the OMI token. All right, before we begin, let me remind all of you that this is absolutely not financial advice. Anything I say or do could get you wrecked and left desolated, living in a box on the side of the river, subsiding on government cheese. All right, with that warning out of the way, we're going to take a look at the 4-hour chart and then look at the bigger picture from the 1-day chart and the 1 week, and just talk about where we think things could proceed from here. And then I'll share with you information about my OMI bag, and then if I plan on adding any more. So we had this wild action that just occurred with this massive pump and breakout. We were sitting nice and quietly at this 0.00122 level, which is at the point of control price on the VPVR. And for those of you who don't know what that is, the volume profile visual range is a histogram that tells us what is happening volume-wise at a particular price point. In other words, how much OMI was bought at this price right here, and how much was that bought during the time period that shows on the chart from today, right now where we sit, all the way back here to the extent of the chart dating back to the beginning of October. Now, the VPVR is on the horizontal side and the regular volume is on the vertical side. So, for example, on this side, this little volume bar here tells us how much OMI was bought and sold during this 4-hour period that occurred on this candle right here. So the price opened up at this point, it rose up, it came down to here where the wick is, and then it closed at this price. So anything above and below the opening and the closing price, well, that makes the body of a candle right there. Anything that happened outside of that opening and closing price, well, that forms your little stem, which is called the wick. Okay, so now that you understand what VPVR is, we can look to the VPVR to give us clues on what the next moves could be. So after we had this nice breakout that happened right here, and this also changes the moving averages, where you can see that there's a blue line. That's the 200 exponential moving average. That means that we take the average price from the last 200 candles and place a dot right there. Then on the next candle, you drop the one off at the very end, add the new one. You get a new average, so on and so forth. This orange line is the 50 exponential moving average. It takes the average price of the previous 50 candles and plots a point. And you take off the oldest one and add the newest one as each candle is printed. The reason why we have these on the chart is because it lets us know when something significant happens, like this crossover. So when the 50 moves above and crosses over the slower 200 line, that's a bullish indication, and it says things are moving up. Okay, and so as long as this fast line is over on top of this slow line, that means you're in a bullish phase. So after we had that breakout, we had a brief consolidation and a formation that we call a bull flag. This is where you have a flagpole. And then if you could just picture a little pennant or a flag waving out here, and you could either call this a pennant or you can call it a flag. If we make it a pennant, it would be a rising triangle that would break out at the end. If you want to draw this differently, you could also turn it into a flag where you include the lowest price and go straight across. Either way, when you see this formation, it usually indicates that you're going to bust out at the top of this whenever you're in a situation where this 50 EMA is above your 200 EMA. And something else that you can consider is that when it's a triangle and you're in a bear market and you're moving downwards, usually this means that you're going to break to the downside. But even though we're in a bear market, we were moving up with the bullish positioning of the exponential moving averages, so we knew that it was going to break to the top side out of that. Now here's another little trick you can do. When you take this little thing here, the flagpole, let's kind of correct this flagpole a little bit, and you plant your flag and then you break to the top side, you can take this little flag and you can replace it. You stick it out here at the end of the breakout and it tells you where price could possibly move up to. And so you can see that it's fairly accurate because this peak here coincides with how high this flagpole is, depending on how you draw it. Now, we notice that we have fallen off of this and there's a resistance there, and I'm going to show you how I knew that there was going to be a rejection at that point, but that's on the next chart. The next thing that we want to look at here on the 4-hour is that after we had this bearish cross here, we were moving down, but then it came back up. And now we have another bearish cross. But notice how on the stochastic, where I've got the fast line in blue, I don't know why I have it the backwards of what I have up here. I should change those on my chart. This fast line is going straight down and is diverging and speeding up to the downside faster than the slow line here. That means we are in an aggressive bearish move. Now, looking downstairs on the MACD, we see that the fast line is about to approach the slow line and cross over, but this oscillator set moves a little bit slower than the ones on the stochastic. So it drags behind and has a smoother action and has less of this janky, jaggedy motion that the stochastic does because of the way that I have this set. But I use this to give me a better clue of an overall trend. So while this one is more general and lags behind, it's telling me that even though we had this double top here and this indecision, overall we're about to cross over bearish. We also notice that these little bars down here on the histogram, they are going from the dark green to the light green. And that means that the momentum is headed towards this zero line, bearish momentum. When you have dark red, the solid red, that means you're sinking. When you have the light red, it means you're trying to get back to that zero line. So the momentum went up, and then it was a little bit of indecision through here, and then it moved down. So where can it go from here? Well, that's pretty easy. All we have to do is look at the VPVR, and we see this big fat node sticking out right there. And if we check the price point, it looks like this big volume node peaks at 0.001467. Chances are, in the immediate short term, we're probably going to float down and level off at that price. And then after we sit at this price, we'll think, well, what's next? We'll look at the indicators, and then we'll find out if we get sucked back down to this lower big fat cluster on the VPVR that is down here at the base price, or it could jump up to this little node that's sticking out at 0.0018. Now there's a chance that it could jump back up because price tends to gravitate towards the volume nodes. We also see that there are zones that I call slip zones where there's not a lot of volume on the VPVR, here and here. When we get in those zones, price tends to really hurry its way to the next volume node above or below. And that's why I call it a slip zone. Okay, so for the immediate, the target would be here at the volume node, or sometimes we bounce off of the 50 EMA line. If the market is still going up in this bear market rally, which is a short-term period of bullish activity within an overall bear market, we can tend to bounce around on the 50 EMA. We could also find a point of inflection down here at the 200 EMA. But right now, the biggest and most glaring clue is right here at this big fat volume node. Okay, let's clear that out and let's change this to the 1-day chart. There we go. Now we're on the 1 day and we've got even more clues on what this action is trying to tell us. So as we had this kind of a double bottom where we see that at the baseline, we touched at this low point here, and then we kind of messed around with the side banding all throughout this period, back down near the previous low point, but you notice that it was a higher low, which is a good thing because that means that we're forming a good solid base. And as I said before, there was another clue that let me know that we were going to get rejected at the current price. And if you guessed it, look at the chart and tell me what you think that clue is. Well, if you guessed the 200 EMA line, you guessed right. So let's get an arrow there. Whoops. Here's the 200 EMA line. And what did we have? When price ran up, it bumped its head on the 200 EMA line and got forced back down. Now, the reason why I think that we're going to probably go to at least this peak node here, this one was sticking out on the last chart. And then here's another one that we see sticking out. The point of control price is higher because we're including more previous price action that happens here on the visible range of the chart. Remember, VPVR, volume profile visible range. Okay, so once we bumped our head on that 200 EMA and we get shot back downward, notice how we passed up this volume node that's sticking out here. Since we passed that up and we did not bounce and find support at 0.00167, that tells us that the rejection momentum is very strong and will probably sail through this small slip zone and head back down here either to this volume node or the ones down below. Now there's another little clue on this chart that let us know that this little rejection is pretty legit. It's on the stochastic. Look at the fast line curling over, coming out of the overbought zone, which is the area above this 80 line. And now the fast line is just about to cross over the slow line. And with this momentum on this big fat red candle here on the 1-day chart, it lets us know that this stochastic is probably going to drop down here and cycle down. Now it does jump around. Sometimes it fakes and reverses as we had this action going here throughout the side banding. But then we noticed that at this bottom point here, when we broke out, the next stochastic peak really shot us up to this high point here. Now, as a general rule of thumb, for you people who are wanting to buy OMI, there's a rule that I go by. You don't ever buy into a crypto project when you're sitting at the top of the stochastic cycle. Okay, you see these tops here? Those coincide with peak price points. So let's just circle these little tops. And you'll notice that when you go up above, they coincide with a higher point. See that? This peak coincides with that right there. So my advice to you, which is of course not financial advice, you never buy in these zones right here. That's not when you buy. If you're trying to do the DCA game, which stands for dollar cost averaging, where you want to buy is whenever the stochastic is low. Like right here, let's get a circle. Here's a good place, even though price didn't come down much, but at least you were better off than buying at this peak. And then once we had this capitulation, now you got a low zone here. That's a great place to buy. And then when this stochastic peak goes up and price does not move much to the top side along with it, that's when you know you're going to get another opportunity. Here's another bottom of the stochastic. That's a good place to buy. Coincides with a nice low price. And then the last one right here, this was a great place to buy because that coincides with this bottom. Now, can you see where you would be better off if you did not FOMO and you were patient and you waited to buy in these low periods here rather than buying on the peaks and getting stuck at a top price because you thought you were going to miss out on a major move to the upside? Hopefully you can. Now, when you stick with that, you're going to end up having a bigger bag and not losing a lot of money from panic selling after you buy at a peak. All right, now let's look downstairs here on the MACD. And we see that it is a lot smoother than the stochastic. And we notice that this fast line is starting to angle down. And we also have a clue here. Look at this bar on the histogram. It just turned from the solid green to the light green. That says that we're declining and we're heading towards this zero line. So we're probably going to see this histogram cycle down, head to the zero line, and maybe put in some red bars like we did here and here. That's also another indicator that lets you know where you're at a good buying point. Notice that we have this set here and this set here of red. Those are my buy zones. And then they coincide with this low point. Whoops, let me get an arrow. Coincides with this low point here. Coincides with this dip and low point here. And then we have these little ones. Here's a little red zone, coincides with a nice low price. And this last one coincides with a great, nice low price. So what we can expect from the one-day chart is movement back towards this point of control price at this peak volume node right here, which also you notice that this 50 EMA is scooting along here and fooling around right near this big peak volume node. So that's a double confirmation that we could fall down and touch that price. Now, this is not guaranteed because something could happen that could shoot this thing straight back up. Some people say it's all about the TA only, and then news is made after the chart movements happen. Well, I say it's maybe 80% TA, and sometimes news can cause a little FOMO and cause the price to change against what the indicators are telling us. And that is the risk that you take. But at least when you're reading the chart, you know that this is probably not a good time to buy because chances are 80% chance will probably continue downward here, even though sometimes you can reverse and get a double hump camel, as I like to call it. Whenever we jump into the overbought zone, we fall out and then go back and get another dip. That's a little double dip on the stochastic. So that's what our one-day chart tells us. Now, when I bought my OMI, it was back at 0.0027. That's 0.00269 is my average. I bought, I don't know, two chunks, like a couple chunks of 500,000 and then got a third chunk. I don't even remember when I bought the third amount, but I'm sitting on 1,500,000 OMI tokens, and that's enough, for right now. I socked away about $2,200 total, and I'm underwater right now, which is okay because there's other projects that I can buy that represent good buying points, like Caspa. I talk about Caspa a lot. But if we can get down here back to this node here, I might dollar cost average and throw in another 500,000. Who knows? We'll just have to see. But I'm satisfied because the OMI token in this entire project represents the one crypto that I worry about the least out of all of them, because without a shadow of a doubt, this project ain't going anywhere. And Vivi is making moves. We have such massive brand identity and alignments with companies that have the biggest intellectual property in the whole wide world. And it only gets better every day. So I am in set it and forget it mode. In other words, I bought and then I don't micromanage the chart. I might look at the OMI chart once a month, if that. And since the peak of the market last spring, I look at it even less frequently than once a month because I know it's all going to come back and it's going to shoot up in the future. Now, let's go to the 1 week chart and then we'll be pretty much done. Here we go. There's the 1 week chart, and this gives us all of the price history since we were printing the data on the TradingView site. There's a lot of price volume history that's before this that is just unfortunately not on the chart, because I remember at the peak point when we were at 0.0, what was it, 1.3 cents? That was a high point that was not on this chart. So the VPVR is only showing us nodes from the complete price history just dating back to the end of August when we started to list the data. The data was being sent to Telegram. Now, what does this chart tell us? Let's just scrunch this down and we'll get a good idea. On this 1 week, we're looking good. Now, you do see some indications that I have here, these little green tables, these rectangles. Those are areas where I try to look at because they represent previous support and resistance zones. And when we're up here and I make a green box down here, it says you might think about buying more here. But if it falls out of that, think about buying more here. If I were to make a new box, I would make one that includes some of these high and low points right here. So I would say that all of this area is a good trading zone where you could pick up and buy and also, just accumulate slowly. So what we see here on the overall VPVR is that we had a lot of action down here at the point of control price, which the majority of the trading action occurs. And a lot of these nodes get put into place because there's a lot of automated trading action happening from institutional buyers, professional buyers that set their bots to buy and sell at certain price points. And we see that there's a big cluster here and then a peak here and a peak here. So once we fully bottom out, let's say that we correct down right now, we come back to this point of control price. What you'll probably see is new action where the bull market starts and then we start to bounce up and down where we come off of these volume nodes that are sticking out right here. Like we might come up to this one, come back down to the point of control price, and then it might jump up to this next node. And then it might fall back and come to a previous support, which is this node or maybe this baby node here. And then it will come back up, and where there was resistance on this node, it might blow through it and find the next one. Then we may correct and find a base at the previous resistance and shoot up to the next one. That's how I determine the possibilities for price action. And it's all about probability. Highest probability right now is that we'll continue to correct, but that doesn't mean it's 100%. And as we move up, your highest probability for where the price will gravitate to are these points that I have listed right here. Why? Because they coincide with the VPVR. And then we'll use the exponential moving averages, the stochastic and the MACD to help us along the way to know what the general direction of the market is and where the trend is going. One good positive is the positioning of this stochastic. It's wide open and moving up with the fast line way above the slow line. And this MACD looks very positive too, because we had this crossover right there where we went from the light red to the dark green, and then we went dark green to light green, and then it's going back and forth right now. So this could head fake and it could do something like this, and then it'll move up, and then we'll enter into the bull market, and away we go. So will I buy more? I don't know. I'm satisfied. I'm not greedy. I know people that have huge bags. You got Dan out there that's got 10 million. You got the man, Randy Chavez, sitting on 100 million. I mean, it's ridiculous. There's some big bag holders out there, and I understand why they're holding their bags. But I might get a little down here, maybe add to it. But I'm just a little guy, a little fish in this big ocean, watching these whales swimming around, and I'll do what I can. But I'll probably hold this for the next 5 to 10 years, maybe taking profits along the way after we get up above 1 cent. But we'll just have to wait and see. You can't be totally greedy and try to completely go to the 100x, 1000x moon, but take a little profits, be responsible, don't spend money that you don't have the ability to lose, and just pick up a little bit every month. So shout out to Reese. He commented on one of my last videos. I appreciate that. It's good to see that you're watching my videos. And I did promise him that I would get a new TA update for everyone to see. And this is one of my favorite charts. I think it's healthy. I think the project is going in the right direction, and it's a great gamble. In fact, I don't even consider it a gamble to myself. Investing is a gamble, period. But I think that this has a little bit more of a factor of safety than an all-out gamble because of all the hard work and the connections and the contracts with all of the major companies that are involved. So that's all I've got for now, but I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And we are glad to have you here with us as we all band together during this journey to the moon. All of us are sitting on the same ship. We have the same goals, and we are in this with each other in support of this fantastic action that we are seeing with the development of a great company.
Yay!
So thanks for joining me. I like to have a little fun, as you know. But we'll see you soon. I'll keep you updated. Post your comments below. Let me know if you're holding a bag right now or if you plan to do some shopping and pick up a bag. If we have this little correction, I'd like to know about it. So we'll see you on the next one. And this is Carlton. I am out.